Let us take a minute to have a look at seasonality for equities. And there is this statistic out there, and we actually mention this one a lot to our clients, where the month of April, which is this part here that I'm circling right now, tends to have a positive seasonal pattern, meaning that stocks have a strong tendency actually to be higher in the month of April as measured by the S&P 500. And I wanted to put this in a little bit of perspective. And while we certainly want to respect this, there is a decent case to be made that we may have here in 2022 already seen a good, if not most or all of this rally sort of having taken place. So what I want to look at here is I want to talk a little bit about liquidity. What does that mean? Well, let's have a look at CPI, Consumer Price Index. This is the one here in the United States. We came in at 7.9% year over year for the month of February, released in March. And so, those are important points to bring about because inflation historically, if you look back a lot of years, let's put it that way. You can look at the chart here that I have right now, which goes back all the way back to the 1920s. You can see we haven't had the inflation rally we've had now since the 1970s. So what does that mean? Well, it means that the Federal Reserve and other central banks are actually less accommodative, and they're really trying to slow down the economy and bring down this inflation picture. So why this matters is the following. So we look at equities and we look at the S&P 500, and we've already had, after I think a pretty notable distribution top in the fourth quarter of 2021 into January of 2020, we've now had a pretty sizable rally of about 12% that looks to be making a lower high. So having already had this rally into the month of April, to me, does put the odds greater and greater that we may have already borrowed, if not some, if not all, of the rally that typically tends to happen in April. The rally that we saw of late, it really started in February, but let's really call it a March rally, and pretty much the second half of March is when most of it took place. So looking over to the NASDAQ 100, which is something that a lot of people look at, here this is even more pronounced, at least optically on the chart. A lot of overhead resistance. Again, we've had a rally in the second half of March, in this case measured about 16, 17%, and depending on exactly where to take it from. Again, into a lot of resistance, given a very different picture of inflation, liquidity, withdrawal. We just heard again from the Fed this week that they are looking to really drain that liquidity as much as reasonably possible, and drain that. But so again, liquidity is something that pushes the markets to the upside. And I think, given the CPI picture, the inflation picture, given what the Fed is trying to do as a result of that, given the fact that we just had a big rally into major resistance, maybe a lower high, I think the odds are increasingly high that we've already seen a good part of that April rally. So take that for what it's worth. I just wanted to point it out because it's something we talk a lot to people about, the strong rally tendency for April. But when I hear so many people talk about it now on TV and other places, now that we've already had this big rally in a situation that's different in terms of liquidity, in terms of what the central banks are doing, I just wanted to point this out that it's, in my opinion, not the time to get super bullish at this point, at this juncture here, as we head into the middle part of April. Hope it helps. We'll see you again soon.